When most people think about investing in robots, they picture Tesla's Optimus or Boston Dynamics Atlas, or of course one of those new humanoids from Figure, where that market is growing more than 30% a year and heading past $100 billion within the decade, because the demand for humanoid robots hasn't even begun yet. And these robots, they're made up of a lot of individual parts like actuators, motors, gearboxes, magnets, sensors, and wiring, where about 2/3 of that cost is in making the robot move, in its joints and in its hands, while the AI brain is what everybody obsesses over is only about 6%. And that machine has quietly become a national security problem. And if you build one without Chinese parts, then the cost roughly triples from about $46,000 to $131,000, because China controls close to 90% of the world's magnet processing. And a powerful magnet sits inside every single motor that's in those machines. And that is precisely why the United States is stepping in directly, where the DoD is now the largest shareholder in America's leading magnet maker, and with its price locked in for at least a decade. So for me, this is a smarter play, because instead of guessing which company is going to build the winning robot, instead you want to own the suppliers that every one of them depends on. So in this case, it doesn't matter which brand comes out on top, because all of the parts makers are going to win. And that is exactly what I'm going to walk through today. The full bill of materials, where some of the names are already running really hot and they belong on a watch list, and then there's a few that are still priced really well where you might want to get in. But once again, the build-out and the demand for humanoid robots, it hasn't even begun yet. This is still the ground floor at the very beginning. My entire goal in this video is to give you the framework and the important names that you're going to want to watch out for, where many of them you might want to invest in when the timing is right. Because as I said at the beginning, humanoid robotics has an estimated 30% annual growth rate. And the reality is, we haven't even seen these yet, and the demand hasn't even kicked in. We'll kick this off with Timken, with the ticker symbol TKR, which is a 125-year-old bearings maker, through two businesses called Cone Drive and Spinia, where they build both of the precision gears at the heart of a robot's joint. Then there's the strain wave reducer and the cycloidal reducer. Nearly every advanced robot joint on Earth runs on one of those two types of gears. And Timken is the only company on a US exchange that makes both under one roof. Those gears already ship in real volume into industrial robots, the arms working on factory floors, along with medical devices, defense systems, and solar trackers. So this is a proven, profitable business already today. But a humanoid needs those exact same two gears in its hips, its shoulders, and its knees, which means as humanoids scale, Timken already makes the part that they're going to need, whichever brand once again comes out on top. And over the last decade, Timken's revenue has climbed about 60% up to $4.6 billion. And the engine behind that growth is its industrial motion division, the side that makes these robot gears, now running at $1.5 billion a year, about 34% of the whole company. And while the business grew, management shrank the share count by about 28%, from 98 million to 70 million. So every dollar of profit, it's now going to land on far fewer shares, with the adjusted earnings set to climb almost 20% to hit towards $7.21. So after a run like this, the stock is truly sitting near the top of its 10-year range, so it does belong on a watch list given its current demand. But once again, it's going to probably kick in here shortly once the rest of robots start to pick up momentum. So when it comes to the single scarcest part of the robot, the joint itself, Timken is the one American name that is already selling it. Now, the only two companies in the world that build these gears even better than Timken are Japanese, and you can own both over the counter, which simply means they trade here as foreign shares, thinner and wider spread, so you may want to use a limit order and keep your size sensible and buy through brokers that offer over-the-counter stocks. And unfortunately, that does not include Robinhood. And the first is Harmonic Drive Systems, which invented the strain wave reducer and still dominates the high end, where a single humanoid can use 20 to 30 of them. And the second company is Nabtesco, which owns about 60% of the cycloidal reducer market, and they already supply the biggest robot arm builders in the world, Fanuc and ABB. And they are the best on the planet at this, which is exactly why Timken matters. It is the one American name that puts both gears, the scarcest, highest value parts of the entire robot, into your portfolio on at least a normal exchange. Now, before I reveal more of my stocks, I want to show you how I pressure test them. And that brings us to today's sponsor, Investing Pro by Investing.com, where they're the world's leading financial markets platform, and Investing Pro is the premium tier. I do my own homework on every stock that I cover, but before I commit, I run my pick through Investing Pro to see if the data and the experts line up with me. Starting with ProPicks AI. So it runs the numbers on the whole tech sector every month, and it comes back with its top picks. Currently around 15 stocks, based on more than 50 different signals. So when the data shifts, the list continually updates, so it's only holding its highest conviction names. So over the past 5 years, Tech Titan has returned almost 3 times what the S&P 500 has over that exact same stretch. So right now, one of the names that it's holding is Marvell. So I pull it up, and fair value on it specifically, it tells me right now it's undervalued, fairly priced, or it's already stretched. Look, if you're putting thousands into the market, you shouldn't be just doing it blind. Right now, you've got 24 hours left to grab the lowest prices on Investing.com has ever offered. Click my link right now for 60% off, plus my code BWB for an extra 15%. Like, don't miss out. It's the best deal that you're going to see all year. Next on the list is Regal Rexnord with the ticker symbol RRX, which builds the entire joint under one roof. Through its motion brands across several names, one company is making the servo motor, the micro motor, the ball screw, and the precision gear that together form a robot's joint. So where every other pure play is selling just one piece, Regal can sell a humanoid, the whole thing from a single supplier. That stack earns its living today inside factory automation, aerospace, medical, and packaging. So it is a real cash-generating business rather than just a promise. And it is the identical content that a humanoid joint is going to need next. And here's where most people might misread the stock. On its trailing earnings, Regal looks expensive, close to 49 times profit. But that number is an accounting illusion, which I like to uncover. When Regal bought Ultra for about $5 billion, the way that deal gets written down buries the company's real earnings. So the scary figure is paper, and it's not exactly on cash. And on next year's actual profit, the stock trades closer to 15 times. So the growth underneath is what I really want to highlight. Over 5 years, Regal has more than doubled its revenue, now at $5.9 billion. And its free cash flow has more than doubled right alongside it, reaching $893 million. And it's wisely using its cash to pay down its debt fast, which drops straight into its earnings. And it's why profit is set to climb from where it is today at 30%. So that mix, growing earnings against a modest price, gives Regal a PEG ratio near a 1. So I want to point out that Regal is a rare company that can build a humanoid, its whole joint, and it still trades right about where you want to own it. Now we'll move from the moving joint to knowing where it is. And that brings us Allegro Microsystems, which is the chip maker whose sensors tell every joint in a robot exactly where it is and how fast it's turning. Every joint needs one chip to sense its position and another to drive its motor, and a humanoid has dozens of joints, which is where Allegro's story gets real interesting. The company lays out a simple ladder for how much of its silicon rides inside a machine as that machine gets more capable. For example, a robot vacuum has about $5 of Allegro's chips, and a factory robot carries about $55 worth, and a full humanoid, roughly $150. So as robots go from vacuums to walking machines, the value that Allegro earns from each one climbs about 30-fold, and it has already won a design that puts close to 90 of its chips inside a single robot's joints. So yes, this is a cyclical chip business that just came through a downturn brutal enough to briefly push it into a loss. And what pulled it back out is AI data centers, now a tenth of all of its sales after more than quadrupling, where revenue jumped 23% in a single year and its free cash flow multiplied almost 6 times over a record $125 million. And the real catch here is that the market is already starting to fall in love with it. It's pushing the stock to its richest valuation in history, and its first robot wins are with Chinese manufacturers rather than American ones. So in just keeping you aware, this is another one to just kind of put it on the watch list and wait for your discounts. Now, I do want to point out that there's a foreign name doing the same job over the counter, and that's Melexis. Belgium chipmaker that makes these same magnetic position sensors and rolled out a version built specifically for a robot's joints, precise enough to tell a motor exactly where it's turning. Once again, I just want to give you the full picture of these OTC stocks to do a little bit extra research on your own. Now, I'm not going to list every single OTC name in today's video, but I will leave a link to my Patreon where I am going to go a little bit deeper in the research so you can check up and see what all I have there. Now, the next area to cover with robots is touch, and it might be the most overlooked sense of all. A robot that can't feel force is really useless in the real world because it would crush an egg, it would lose its balance, or break your hand when it shook it. So every humanoid needs force sensors in its wrists, in its ankles, its fingers, and this is the one layer the big supply chain studies call the most wide open opportunity that's left, because nobody's built the standard part yet. Right now, one of the best options is Novanta with the symbol NOVT, which builds the leading 6-axis force sensor, the exact part that gives a robot arm its sense of touch, and it also owns Celera Motion, which makes the controllers that turn the sensing into precise movement. So it sells 2 of the hardest to source pieces in the whole robot. And over the past decade, its revenue has grown more than 160% from $374 million to nearly $1 billion. And it has now teamed up with Nvidia to drop its sensors straight into Nvidia's robot platforms. Now, one thing I don't like is that Novanta does not break out its robot revenue, and its biggest near-term growth is actually a medical deal. Now, if you want the purest bet of them all, there is Vishay Precision Group, ticker symbol VPG, which makes the foil strain gauge, a 100-year-old piece of precision engineering that is the actual sensing element inside most of the force and load sensors going into robot wrists. It may be the only American pure play on force sensing that you can buy, but the fundamentals tell a little bit of a cautious story. Its revenue has sat flat at around $300 million for years, and its earnings just slid to a cyclical low, from 2.6 a share at 2022 peak down to about 40 cents, yet the stock still re-rated to an all-time high on humanoid hope alone, even though that humanoid revenue is under 1% of its sales. Now we'll move on to the site for a robot with Cognex, the ticker symbol CGNX, which is the world leader in machine vision, the technology that gives a robot its eyes. And what sets it apart is the AI that's inside. Its edge learning software trains a system to tell a good part from a flawed one off just a handful of images, with no data scientists required. And its newest cameras put that AI directly onto the camera itself, one line running on Qualcomm chips and another on Nvidia. That turns a Cognex camera from a simple sensor into an edge computer that thinks at the exact spot that it sees. And once one of those systems is wired into a production line, ripping it out means revalidating the whole line, so it stays for years. It's the kind of moat that 4 decades of vision software and a brand synonymous with the category has really built up for itself. And over the past decade, well, Cognex has roughly doubled its revenue up to nearly $1 billion. And while like many of these, it moves in cycles, it is climbing out of its 2023 low, with revenue up more than 24% and earnings more than doubling from the year before. And the entire recovery, it comes from a single end market, logistics and warehouse automation. Now its largest sector, growing double digits for 9 quarters straight as e-commerce keeps building out. And none of that has even touched humanoid robots yet. Every one of these machines still answers to a brain. And even though the brain is only about 6% of the robot's cost, it is crucial to making them mainstream. And here, Nvidia wins on both ends. On the robot itself, it sells Jetson Thor, a small onboard computer that lets the machine see, think, and react in real time. And back in the data center, it sells the second brain. It's the one that trains these robots and coordinates whole fleets of them. And those data centers, well, they already run on Nvidia chips. And of course, everybody is chasing a cheaper brain, and the fight has really started, with Qualcomm building a humanoid-specific chip called Dragon Wing, and the big automotive names, NXP, Texas Instruments, and Infineon, all now shipping silicon aimed at robots. But if you want the fastest learning, most efficient brain on the market, well, Nvidia still has the goods, and I have been banging that drum for a very long time, so I'm not going to get too much into it here. Now, when it comes to the brains of this robot revolution, Nvidia collects on both ends, while everyone else is just racing to catch up. Now, strangely, one of the most important features of a robot is the most basic items you can get. Well, and that's a magnet, which brings us to the raw material itself of MP Materials with the ticker symbol MP. And it's the only American company that owns the entire rare earth magnet chain under one roof, from a mine in California all the way to a finished magnet. Magnets are the hidden heart of the whole robot, because every high torque motor, every joint that's in a humanoid, and every electric car, well, they're all going to rely on permanent magnets. And if you recall at the beginning, I shared that China controls roughly 90% of the processing. And that is precisely why the Department of Defense stepped in, and they bought a stake big enough to become MP's largest shareholder, guaranteed the company a floor price on its key material for 10 years. And they agreed to buy the entire output of its new plant. I don't know, in my mind, when the Pentagon co-signs your business, you're really no longer just a mining stock. Now, I do have to warn you, this isn't a stock that you just buy based on its earnings, because there really aren't any yet. Even as revenue has climbed from under $70 million to about $275 million, MP still loses money running their business. It's burned through roughly more than $300 million in cash building all of this infrastructure. But what you really are buying is a factory, and its existing plant in Texas makes about 1,000 tons of magnets a year, and the one going up right beside it is built for 10,000. That's literally a tenfold jump, with production targeted for 2028. And like I said, Washington guaranteed the price and agreed to buy all of it. And Apple's already signed a deal worth around $500 million for American-made magnets. Now moving on, there also has to be somebody willing to assemble millions of these machines. And the early leaders are starting to line up, where Jabil has become the worldwide production partner for Apptronic's Apollo humanoid. And the car world is pushing into it too, with auto parts giant Magna taking stake in robot maker Sanctuary AI and opening its factories. The companies that already know how to build complex hardware by the million tend to win the mass production phase. And these two look to be planting their flags early. Now we've gotten to the point where our framework is left with one big hole to fill, and it happens to be the scarcest, highest value parts in a robot, and it's the gears and the screws inside the joints. And this is where America happens to be the thinnest. On the gears, you can at least own the best in the world over the counter with Harmonic Drive and Nabtesco that I mentioned earlier. But the roller screw, which can run up to a third of the cost of a linear actuator robot, is one of the tightest choke points in the entire machine. Now, the ultra-precision specialists, Rolvis and GSA in Switzerland, well, they happen to be private, so you can't invest in them. But two of the giants that make them do trade over the counter, and both are chasing this market today. And one is SKF, the Swedish bearings maker building roller screw modules purpose-built for humanoids. And also Schaeffler, the German giant whose business makes them and just signed a major deal to supply the actuators for a whole fleet of humanoids. Now, the same holds true for the rails that those actuators slide along. It's the linear guides led by Taiwan's Hiwin and Japan's THK, which both of them you can also reach over the counter, where I'll try to provide some deeper analysis and information as I mentioned down below. So is there an answer to this part here in the US, or at least on the more open market? And the answer is sort of. From my point of view, the name to watch here is Moog with the ticker symbol MOG.A, where they do actually build world-class actuators today, but they go into fighter jets and spacecraft, and its robot revenue, well, it's essentially zero. What it does have is the real engineering to break into this space. So you put it on the watch list, well, not because it has a robot story today, but for the day that it lands an actual humanoid win, which we're all watching for. To me, that would be the signal that America's finally filling this one part of the robot that it can't quite build at scale today. So let me take a second and pull this whole thing together. So we just walked through the entire machine in the framework that I've given in many of my videos. We've got the gears and the motors that move it, the sensors and the eyes that let it feel and see, and the magnets it is built from, and the brain that, well, it runs it all. And the point is the one that we started with. You don't really have to guess which robot is going to win. Sometimes the smarter play is the sum of the parts, where you just want to own everything that goes into them. So when I look at all of these together, here's my read of this basket. A lot of these names has already been running up high because of hype, so you're going to need some discipline in the game. Regal Rexnord is the one that's still reasonably priced, and it's sitting right about where I'd want to own it it today. Then we have Timken, Allegro, Cognex, and Navanta, and they're all items that I have on my watch list. And it's true, I feel like they're terrific businesses whose prices have just gone up a little bit quicker than the momentum is actually justified. Next, we have MP Materials and Vishay Precision. And they're the speculative swings, but MP is really betting on America, and America is kind of betting on it. And then lastly, we have Moog, and it's the one to watch to see if the US can finally begin to close the gap on actuators. Then, of course, we have the foreign names that you can only buy over the counter, and the reducer makers, the roller screw and the linear guide makers, and the sensor names. And the data is a little bit harder to pull together. So I did try to get my complete list, and of course, like I said, I'll share it down below. I hope you're able to get some value out of today. And of course, please, I do this for educational purposes, and in no way is this financial advice. My whole intent is to try to help everyone get ahead of the robot boom, and part of it is just knowing which ones to watch when the right timing begins to kick in. So, as always, thanks so much for watching, and I'll see you on the next one.